Hello again, everyone. This is Nathaniel Gibson, and this is my analysis and breakdown of the top revenues for the city of Marietta. And so, as a brief reminder, I am evaluating the 2020-2021 fiscal year of the city of Marietta's biennial budget, which was started in the fiscal year 2019. And as a brief overview of my discussion, I'll be taking a look at the top 3 revenue generators for the city, evaluating what those are and how they are created, basically what goes into each of those. I will also be showing what the total percentage of those specific revenue generators are in comparison to the total budget. And then I'll also take a look at the extent of burden distribution that those have on the population, as well as whether or not these sources of revenue are progressive or regressive in nature. So let's take a look at the top revenue generator categories in the City of Marietta's 2020-2021 proposed budget. The top 3, starting with the general fund, then the fire district fund, and the Measure T tax fund, are the largest contributors to the overall revenue budget, with the general fund being about 39.8%, the fire district fund at 13.5%, which is mostly like property taxes, and then the Measure T tax, which is very recent for the city, is all sales taxes, and that's about 13.1%. And combined, these 3 revenue sources equal about $81 million for the city's overall budget revenue, or about 66.4% of the total revenue budget. Now, taking a closer look at the city's largest revenue tax category, the general fund, there are 2 specific tax revenue contributions that immediately stick out right away, and that is the standard and the standard property and sales taxes. And these 2 sources contribute approximately about 32 to 33 million of the city's largest revenue category, which is the general fund, and you can see that here. So with these factors observed, could the city's taxation efforts be considered regressive or progressive? Well, in the Harry Kitchen, Melville McMillan, and Anwar Shah article, Property Taxation Principles, the authors here argue that property taxes generally intend to be progressive in nature, but things like circuit breakers and exemptions come into play, which often lead to disproportionate levels of equity in the property taxation of citizens. And then looking at consumption sales taxes in the Adams and Walker article, the lifetime incidence of consumption sales taxes, the authors here are arguing that sales taxes in general are regarded as regressive in nature because they tend to have a fixed cost on or percentage rate on consumption and other various goods that often affects lower income individuals more than wealthy. And this is because the natural propensity to consume either regresses or just stays the same, even though someone's income rises. So this means that the percentage of their income that a wealthy person is paying towards their taxes on the same amount of goods that a lower income individual might consume tends to be at a lower amount of their income because they're paying the same amount for the same goods and services, but they have more money to do it with. And so consumption taxes are thus considered more regressive. And so in conclusion, I think the city of Marietta tends to lean more regressive in its taxation of its communities because of its propensity for sales and property taxes of its individuals, which in reality, those tax revenues tend to be more regressive in nature because they favor people who make more money and give them more exemptions and allow them to pay either less or the same for the same amount of goods and services. And listed here are a couple of the references that I used to support my discussion this week.